Hello guys and welcome. Today we're diving into something that affects every single American, regardless of your politics, your background, or your beliefs. How our economic system was deliberately engineered to keep you financially trapped. Before we begin this journey together, I want to know where you're watching from. Drop a comment below telling me what part of the country or world you're viewing from. Hit that like button if you've ever felt the economic squeeze we're about to discuss. And subscribe to make sure you don't miss the truth that the powers that be don't want you to hear. What if I told you that the financial struggles you face aren't your fault? That the system wasn't designed for you to win? That the game was rigged from the start? Tonight, we're pulling back the curtain on the elaborate financial prison that's been constructed around everyday Americans. A prison with invisible bars made of debt, inflation, and monetary policy that serves the elite while keeping the middle class running on a hamster wheel. For decades, Americans have been told a story. Work hard, save money, buy a home, and you'll achieve the American dream. But that story has increasingly become a fantasy for millions. The median wage, adjusted for inflation, has barely budged since the 1970s, while the cost of housing, education, and healthcare has skyrocketed. This isn't an accident. It's not a natural economic evolution. It's by design. In the next hour, I'll show you the architects of this system, how they benefit from your financial struggles, and most importantly, how to recognize the chains before they're locked around your economic future. The first link in the economic chain designed to hold you captive is debt. Not just any debt, strategic debt that's introduced to you before you're even old enough to understand its implications. Remember when credit card companies set up tables on college campuses? They weren't there because they believed in higher education. They were there to hook young Americans at the earliest possible moment, creating lifelong customers who would transfer balances, pay minimum payments, and generate decades of interest income. The student loan industry represents perhaps the most insidious form of this debt trap. Unlike virtually every other form of debt, student loans cannot be discharged in bankruptcy. Think about that. You can declare bankruptcy on a failed business venture, a yacht, or a vacation home, but not on the education you were told was essential to participate in the economy. What began as a well-intentioned government program has mutated into a $1.7 trillion industry that has millions of Americans paying off loans well into their 40s and 50s. The average student now graduates with nearly $40,000 in debt. Before they've earned their first professional paycheck, they're underwater. Who benefits from this arrangement? Not the students, not their families, certainly not our economy as a whole, which suffers when young people delay homeownership, marriage, and having children because of crushing debt. The beneficiaries are the financial institutions that hold these loans, the universities that have raised tuition at rates far exceeding inflation because they know the money will keep flowing, and a government that collects interest on federal student loans. This isn't conspiracy theory, it's business strategy. And it's only the beginning of how the system keeps you financially subdued. Perhaps no aspect of the American dream has been more effectively weaponized against the middle class than homeownership. What was once a reliable path to wealth building has become, for many, an unattainable fantasy or a financial albatross. In the 1950s, the typical American could buy a home for about twice their annual salary. Today, the average home costs about 6 times the median household income. In desirable coastal cities, that multiple can easily reach 10 or 15 times annual income. This didn't happen by accident. Central bank policies have systematically inflated housing prices while wage growth has stagnated. Low interest rates benefited existing homeowners and investors while pushing prices further out of reach for first-time buyers. Meanwhile, Wall Street firms like BlackRock and other large investment groups have purchased hundreds of thousands of single-family homes, often outbidding families with all-cash offers, only to convert them into rental properties. This creates a permanent renter class with no path to equity building. The same politicians who claim to champion affordable housing routinely block new construction through zoning laws and building restrictions. They publicly decry the housing crisis while privately ensuring their own property values continue to rise by limiting supply. And what about the mortgage interest deduction? It's touted as support for homeownership, but who does it really benefit? Not the working-class family in a modest home. The real winners are Owners of million-dollar properties who receive subsidies through the tax code that dwarf any benefits received by middle-income Americans. The housing system doesn't just passively fail to serve average Americans. It actively works against them, transforming what should be a basic cornerstone of financial security into yet another mechanism for transferring wealth upward. While politicians argue over marginal tax rates and deductions, the most pernicious tax of all operates silently in the background, steadily eroding your purchasing power year after year. I'm talking about inflation, the hidden tax that requires no legislation, no vote, and that most Americans don't fully understand. When the Federal Reserve creates trillions of new dollars, as it has done repeatedly over the past 15 years, each dollar you've saved becomes worth less. Your bank account might show the same number, but its real-world purchasing power has declined. This is effectively a tax on your savings, and it hits the prudent middle-class saver hardest of all. Who benefits from this arrangement? The largest debtors in the world, primarily the federal government itself, which sees its massive debt burden effectively reduced through inflation. It also benefits the ultra-wealthy with hard assets like real estate and equities that appreciate with inflation, while those living paycheck to paycheck watch their wages fail to keep pace. Consider this. In the past 30 years, the cost of college has increased nearly 200% after accounting for inflation. Healthcare costs have risen at similar rates. Housing in major cities has far outpaced general inflation. Yet wage growth for the middle class has been anemic at best. This systematic devaluation of the dollar is no accident. It's a deliberate transfer of wealth from savers to debtors, from workers to asset holders, from the middle class to the financial and political elite. When you combine inflation with artificially low interest rates on savings, the message becomes clear. The system doesn't want you to save. It wants you to remain dependent on credit, on debt, on the financial treadmill that keeps you working harder just to stay in place. The dismantling of America's retirement system represents one of the greatest bait and switches ever perpetrated on working people. What began as a promise of secure golden years has transformed into a casino where ordinary Americans bear all the risk while financial institutions collect fees regardless of performance. For most of the 20th century, many Americans could count on defined benefit pension plans, guaranteed monthly income for life after decades of service. Today, less than 15% of private sector workers have access to such plans. Instead, they're offered 401(k)s and told to become investment experts in their spare time. This shift didn't happen organically. It was a deliberate strategy to move retirement risk from corporations to individuals while creating a massive new revenue stream for Wall Street in the form of management fees and transaction costs. Even Social Security, the baseline retirement program Americans have paid into their entire working lives, is constantly threatened with cuts or reforms that would reduce benefits. Meanwhile, the payroll taxes that fund it are capped, ensuring the wealthiest Americans pay a far smaller percentage of their income than working-class citizens. The financial services industry extracts approximately $1.3 trillion annually from the American economy, more than the GDP of most countries. A significant portion comes from retirement accounts, where fees of just 1 to 2% can reduce your retirement savings by 25 to 30% over a lifetime. The result? Nearly half of Americans approaching retirement age have less than $100,000 saved. Many will be forced to work well into their 70s or 80s not because they want to, but because they can't afford not to. This isn't market failure. It's market design. A system engineered to transform what should be the secure culmination of a lifetime of work into yet another source of anxiety, dependency, and ultimately, submission to economic forces beyond your control. If there's one system designed to keep Americans financially captive and compliant, it's our healthcare system. Unlike virtually every other developed nation, we've created a labyrinthine structure that ties your access to medical care to your employment, effectively turning health insurance into handcuffs that keep you tethered to your job, regardless of how unfulfilling or underpaid it might be. Americans pay roughly twice what citizens of other developed countries pay for healthcare, yet our outcomes are often worse. We're the only advanced nation where medical bankruptcy is a common occurrence, with approximately 500,000 families financially ruined by medical bills each year. The average family premium for employer-sponsored health insurance now exceeds $22,000 annually, essentially a second mortgage payment. Yet even with Insurance, deductibles, and copays can leave families facing thousands in out-of-pocket costs. Who benefits from this arrangement? Certainly not patients. Not doctors either, who spend a third of their time on paperwork rather than patient care. Not employers, who struggle with ever-increasing premium costs. The winners are insurance companies, whose stocks have consistently outperformed the market. Pharmaceutical companies, which charge Americans multiple times what they charge patients in other countries for identical medications. And a massive healthcare bureaucracy that adds cost without adding care. This system creates the perfect conditions for economic servitude. When changing jobs might mean losing healthcare coverage, when starting your own business means risking financial ruin if you or a family member gets sick, you're much more likely to stay in your lane, keep your head down, and accept whatever wages and working conditions you're offered. It's not just a failed market, it's a carefully constructed trap that sacrifices your health and financial security to maintain corporate profits and economic control. The transformation of American higher education from a path to opportunity into a mechanism for debt servitude represents one of the most effective tools for maintaining economic control over the population. Universities that once prepared students for productive careers at reasonable costs have morphed into luxury resorts with climbing walls and lazy rivers, administrative bloat that far outpaces growth in teaching positions, and tuition that has increased at twice the rate of inflation for decades. Why has this been allowed to continue? Because an entire financial ecosystem has developed around it. Federal student loans flow directly to universities with no conditions on outcomes or price controls. Lenders profit from interest and servicing fees. Universities expand their empires while facing no consequences when graduates can't find jobs that justify their educational investment. Meanwhile, the skilled trades, jobs that often pay six figures and can't be outsourced, are stigmatized. Young Americans are pushed toward four-year degrees regardless of their interests or aptitudes. Technical education has been systematically devalued, creating both a skills gap in our economy and ensuring maximum participation in the debt-generating university system. Even more insidiously, as degrees have become ubiquitous, their value has diminished. The bachelor's degree that once distinguished job candidates is now the minimum requirement for positions that previously required only a high school diploma. This credential inflation forces students to pursue even more advanced degrees and take on even more debt, just to stand still. The result is a generation of Americans starting their adult lives already underwater, making them more compliant workers, less likely to take entrepreneurial risks, and more dependent on the very system that indebted them in the first place. America was built on small business, the local entrepreneur, the family-owned shop, the independent producer. Today, those pillars of economic independence and community wealth are being systematically eliminated, and with them, one of the last paths to true financial autonomy for everyday Americans. Since the 1980s, the rate of new business formation has declined dramatically. Today, business ownership is increasingly concentrated, with corporate giants dominating virtually every industry from retail to agriculture, banking to healthcare. This consolidation isn't simply the natural evolution of the market. It's been facilitated by policies that favor scale above all else. Tax codes that give advantages to large corporations able to maintain teams of accountants and lawyers. Regulatory structures so complex that compliance costs alone can crush small competitors. And antitrust enforcement that has been neutered to the point of irrelevance. The COVID pandemic accelerated this trend dramatically. While small businesses were forced to close as non-essential, big box retailers remained open. The predictable result? The largest transfer of market share from small independent businesses to corporate giants in American history. Who loses when small business declines? Communities lose their economic foundation and identity. Workers lose leverage in wage negotiations when fewer employers compete for their services. Consumers lose choice and ultimately pay higher prices as competition diminishes. Perhaps most importantly, Americans lose one of the traditional pathways to financial independence. When starting a business becomes too risky, too complex, or too capital-intensive for ordinary citizens, another avenue of economic mobility closes, further cementing the financial servitude of the working and middle classes. This isn't creative destruction. It's destructive creation, the deliberate engineering of an economy that serves concentrated power rather than distributed opportunity. For decades, Americans have been told that globalization is an unstoppable force of nature, like gravity or the tides, that we must adapt to rather than question. In reality, it was a policy choice made by elites that sacrificed American manufacturing, working-class stability, and national resilience on the altar of corporate profits and cheap consumer goods. The numbers tell the story. America has lost roughly 5 million manufacturing jobs since 2000. Entire communities that once supported middle-class families on single incomes have been hollowed out, leaving behind unemployment, substance abuse, and despair. Who benefited from this arrangement? Multinational corporations saw their profits soar by accessing cheap labor markets. Financial institutions profited from the massive capital flows globalization created. Wealthy Americans enjoyed lower prices on consumer goods while their investment portfolios grew. Who lost? The American worker, who was told to compete with labor in countries where wages were a fraction of our own and environmental and safety regulations were minimal or non-existent. The American taxpayer, who funded the social safety net programs necessary to support those displaced by these policies. And ultimately, American national security, as we became dependent on potential adversaries for essential goods. Perhaps most cynically, the same elites who champion shipping jobs overseas now lecture displaced workers about the need to learn to code or relocate for new opportunities, as if communities, family ties, and cultural connections are easily discarded economic externalities rather than the essential fabric of American life. The globalization that was presented as inevitable was in fact a choice that prioritized efficiency and shareholder value over resilience and broadly shared prosperity. The result is an America more economically stratified and less self-sufficient than at any point in modern history. The merger of big tech and big finance has created unprecedented mechanisms for economic control and behavioral manipulation. Far from the liberating force it was once promised to be, technology has evolved into perhaps the most effective tool yet for maintaining the economic status quo and suppressing dissent against it. Consider the banking and payment systems that now dominate our financial lives. With a few keystrokes, you can be debanked, cut off from the ability to participate in the modern economy because your views or business activities don't align with the prevailing orthodoxy. No trial, no appeal, no recourse. Social credit systems, already operational in countries like China, are increasingly being implemented in the West through different means. Your online behavior, spending patterns, and social connections are all monitored, analyzed, and used to determine your access to financial services, employment opportunities, and more. The gig economy, celebrated as providing flexibility, has in many cases simply replaced stable employment with algorithmically managed piecework that offers no benefits, no security, and no path to advancement. Workers are monitored constantly, rated on metrics they often don't understand, and can be deactivated without explanation. Even the promise of financial innovation has been co-opted. Cryptocurrencies that began as a decentralized alternative to the banking system are increasingly being integrated into that very system, with regulatory frameworks designed to eliminate their threat to established financial powers. Perhaps most concerning is how digital technology enables unprecedented surveillance of economic activity. Every purchase, every financial transaction, every economic decision you make is tracked, stored, and analyzed. This data isn't just used to sell you products. It's used to predict and modify your behavior in ways that serve the existing economic order. The technological tools that could have democratized economic opportunity have instead been weaponized to reinforce economic control, creating an invisible but nearly inescapable system of financial surveillance and manipulation. Throughout this series, we've exposed the deliberate architecture of financial captivity that keeps millions of Americans struggling despite their best efforts. But understanding the system is only the first step. The more critical question is, how do we break free? The answer begins with rejecting the false narratives we've been sold. Debt is not a path to prosperity. It's the primary mechanism of your financial captivity. The solution isn't more favorable terms on your chains. It's to escape them entirely. This means embracing radical financial independence, living below your means, eliminating debt, building emergency savings, and investing in hard assets that retain value regardless of currency fluctuations. It means recognizing that true security comes not from government programs or corporate benefits, but from your own resilience, and self-sufficiency. At a community level, it means supporting local businesses even when it's less convenient or marginally more expensive than ordering online. It means creating parallel economic structures, local food systems, community banks and credit unions, and mutual aid networks that operate outside the control of centralized financial powers. Politically, it means demanding transparency from institutions that deliberately obscure their operations to avoid accountability. The Federal Reserve, the Treasury Department, and the financial regulatory agencies all make decisions that profoundly impact your economic future, yet operate largely outside the public view. Most importantly, it means recognizing that the system wants you divided by race, by gender, by generation, by geography, because unity is the greatest threat to economic control. When Americans see past these artificial divisions and recognize their common economic interests, the potential for meaningful change becomes unstoppable. The path to economic liberation begins with understanding the nature of the cage. Tonight, we've mapped its dimensions. In the coming months, we'll continue exposing the architects of financial captivity and providing you with the tools to secure your own economic freedom, regardless of which party holds power or what Wall Street predicts. The American dream isn't dead. It's just waiting to be reclaimed by those brave enough to break the chains they've been conditioned not to see. Thank you for watching, and remember, the truth may not always be comfortable, but it's always worth knowing.